Hello traders, this is Progress Forex speaking. Welcome to my YouTube channel. So in this video, I'm going to teach you how to use multiple moving averages and MACD indicator. Most people usually don't know that MACD indicator is one of the major indicators in the market. But in this video, I will review a lot of secrets of MACD. But before then, let's delete this chart and add it again so that you'll be able to apply it easily in your own chart. Let's go to F key, select here, you select delete and select all of them, then delete. This is normal chart. So here, go back to F key. Let's first of all add the moving averages. So the first moving average is 10 moving average. You set the period to 10. Then a method to exponential, apply close and select the color of your choice. Then you're okay. Go back to the same F key. Select moving average. Here you set the period to 20. Method to exponential and apply close. Then I will select purple. Okay, go back to F key, select moving average. This time around you add 34 moving average. Here you set to simple, then apply close and color to 30. This is the 3 most powerful moving average discovered by Progress Forex, and trust me, if you learn how to use it properly, we've been teaching about it in most of our videos, and trust me, you will enjoy your trading with less stress. So let's go back to F key and add MACD. So you may be thinking, where do I find it? Then you have to click the same main chart, then come down to selectors and select MACD. So you leave the parameters the way they appeared, or if it didn't appear like this, you set the fast EMA to 12, slow EMA to 26, and MACD SMA to 9. Then you apply close and change the color to your choice, but I like black and red. So okay, so you see how it's looking. So in order to find this basic thing which I want you to know in this particular strategy, we have to add either relative strength index or stochastic, which will allow us to set the levels. You go to F key and this time around come down to indicator window 1, then come down to oscillators at the same time and select relative strength index. Here, this is what you will do. Leave the period to 14, apply close, and under the style, which way is where the color is, you have to leave it to either color white or any of these two, in fact, because that is the major interest. Our interest is not to allow to use the relative strength index indicator. What the interest is the MACD, both the chart line and the signal line, to see how they work together with the moving averages and how best you can use it. So you come down to level. Here, you will not find these numbers like this. You are the one to add it. So in order to add it, you come to this plus and plus as much as you can. So you type 90, then you in the same place, once you click, or even here for instance, you see, you click here, you find you type 90, then type strong sell, 80 to sell, then 50 will not be needed in this case. You remove 50 entirely. Then you type 20 to buy, then 10 to strong buy. This is what you will do. You select delete and remove the ones you are not using. So you select those ones you are not using and click delete. There we go off. Then you go back to the chart. So you see how the chart is looking. So let me teach you what is very, very important in using MACD here. So due to what I told you, it is always best to use this strategy with 1 hour, 4 hours, or maybe 30 minutes time frame. Let's see how it looks in 1 hour time frame. You can see how it looks. So let's go back and see how it looks in 30 minutes time frame. So this is my own suggestion: 30 minutes, 1 hour, and at worst 4 hours time frames. So here, this is the current price of GBP USD. So there is something I'm waiting for before I strike, based on what I will teach you here. Watch it closely. So whenever the MACD, for instance, before then, this is the black colors you're seeing here is the MACD chart line, and the red line you are seeing here is the signal line. So whenever this signal line, this chart line and signal chart line is not actually your problem here. What you should be looking at, which is the major problem you should discover. Once you discover it, you will trade the MACD easily, is this signal line. You have to respect it. You have to respect it and its actions, because it has a lot to do with MACD strategy. So whenever it crosses below this 20 chart line, for instance, and before then, I want you to note this. This is MACD zero line level. It means whenever the MACD is developing inwards, for instance, below the MACD chart line, which is the red color, developing below the MACD signal line, which is the red color, then you know that the market is about to start a downtrend. And whenever it started developing outward, as you can see here, it means it's already on downtrend. Whenever it started developing inward, it's anticipating a possible uptrend. And once it started developing above the MACD chart line, which is the red color, it means the market is on uptrend. So here, before we continue, first thing you have to note is whenever the chart line, the signal line crossed below this 20 level, buy level, you have to wait patiently for it to finish ranging here. This is where most people make mistakes. You find most people selling, you find most people buying amateurly. Imagine once this candlestick that pushed like this, a lot of people will buy, boom, it will come back and use this spike here and look for their stop losses. So what we have to do, even this MACD chart line used to develop the same W format or M format in most cases. So as you can see, the same W format here at this point. Look at this here at this MACD point. Whenever it crosses, you have to wait for it to finish ranging. First, it will first of all reduce inward the very first time. Do not make a buy or sell in the case of downtrend. You have to wait for it to come back again. Sometimes it will come above, more below the MACD signal line, and touch this same 10 buy strong buy level, which indicates that the buyers are currently placing trades, which means the market has been oversold and buyers have started reacting in the market. Then you still have to wait, because here is not your interest, because if you should make entry from somewhere here, it means you are trading a reversal. That is what people call reversal, yet they don't know how to trade it. But of course, I will teach you how to trade reversals in one of the recent potential videos, which I will be dropping soon or soonest. So, but before then, what you have to do is to wait for the chart line of this MACD to develop inward the signal line until you get to this zero level. You continue watching the market closely until you find out. Of course, you've seen it cross together with the moving average at this point. The moving average crossed above each other, of course. That is, the 10 and 20 crossed above the 34 moving average. But that is not your major interest. Your interest is to wait for the market to retrace, because whenever it crosses Neary, it used to come for retracement. So whenever it's retracing, you continue watching this place of the chart while you are looking at this MACD as well, because sometimes whenever it's retracing, the chart line will start developing below the MACD again. Sometimes it doesn't happen like that. It will just continue growing like that until the market will finish retracing. It depends on however it's behaving. But whichever way, what you have to do is wait until you find a bullish or bearish engulfing candlestick. Look at bearish engulfing candlestick in this case. Look at bullish engulfing candlestick in this case. So you wait closely until, and of course the bullish engulfing candlestick, the first bullish engulfing candlestick here is the same first MACD chart line that went above the signal line. So in as much as this chart line is growing above the signal line, you are to wait. Remember how it behaves. The first one will be touching at this 80 sell level, or maybe strong sell level. It will not touch the strong sell level, it's the 80 sell level. If another one comes in, it will reduce. That is why they say that indicators lag. So if you understand how indicators lag, you also trade it successfully in the market. So whenever a new one comes, it will adjust itself and go back, continue like that until it started touching this strong sell level. Then the market will continue ranging at that particular point. So once you make your entry at this first candlestick, immediately it closes, or before it closes, if you have mastered the strategy, you leave it until you find out that the MACD chart line has started ranging at this very line. It used to range close to this line, no gap. It will keep forcing itself, as if it could push away, but of course no, or go above. So whenever it goes above, it's only these two you will see. Look at the two here, look at the same two here, and of course these two. But what happened here is, like I told you, whenever it touches this 90 sell level and push the very first time below, you have to wait for it to see if the market is closing or not. If it doesn't close, you still wait until it develops above the same signal line and start touching again at the 90 sell level. That time you know that the market is getting ready to start falling. And of course the M format doesn't develop properly here, but you can see the same M format in the MACD signal chart lines. You can see it here. Look at the gap below the MACD signal line, and of course the chart lines. So here, if you don't know how to trade reversal, you are still going to wait as advised until the market, that is the 10 and 20 moving average, will cross below the 34 moving average successfully. As you can see here, the MACD started developing below the zero level, but due to the fact that it always retraces in most cases, that's why the market pulled up again. So here you can see confirmation of a bearish engulfing candlestick, and the market is ready to sell. But due to the fact that there is something I always wait for, let's go to 1 hour time frame and see what happens. You see that it's yet to close here, and that is why the markets have not pulled down with full force. So you can also see the chart line in the 1 hour time frame. It have not started developing below the zero level of the MACD, which means until it happens, the 4 hours cannot move as expected. That is the trick. And that is why I said always use smaller time frame to confirm if your trade is ready to move before you place it. As you can see, this one have crossed at once and continue moving, but the 1 hour is not ready. And that's what is stagnating the market. Until it finishes crossing, as you can see here, before the 4 hours time frame, which is ready. You can see the bearish engulfing candlestick ready for sell. This is current market price of GBP Euro USD. GBP USD. So you can see how ready it is, but could not sell. Even if you make entries here, there is nothing to be afraid of. But myself, I used to wait until everything gets confirmed. So when you look at this place, you find out the same thing played out. But in some cases, like you can see here, when the market trend is very rugged and still very, very bullish in nature, you see, this thing is what you will find. Whenever it pushes down, and in this case, you find a significant something here. The MACD chart line did not cross the 0 level. So, and that is what used to kill some persons. Imagine if you make a sell here without proper confirmation, the market will pull back. And of course, MACD chart line start developing again above the signal line. Whenever it does, you are expected to accept your loss and make a buy. Continue trading from here because it might go as far as you never expected. So, but the fact is, at the end of the day, it will still pull down to that point. But do you have the equity to hold? That is the question. So that's how to trade this MACD. Mind these two places. Mind whatever that is displaying here. Look at the M format, even though it's not well developed, but you can see it here. The first time it shoot, second time it came in and developed below, shoot back again, then starts coming back. If it doesn't happen like that, then you know that it's not ready for sell or buy in case of uptrend. So until you find it, the moving averages cross together with the same MACD 0 level and retraces, do not make entry. Look at the same thing here. It pushed down, went back, crosses the MACD 0 level. The same way the moving averages crosses here, it retraces, it pushed again. So that is how it works. So until here, until the market the 1 hour chart crosses here, I am not going to sell, even though 4 hours confirmed a sell. As you can see, it is not ready for sale until it is well confirmed. And of course, whenever it confirms, you find that this chart line will start developing below the MACD signal line, which is the red color. But now you can see it's still above. So until it is below, I am not making any sell. So that is how to avoid risk entirely in the market. Subscribe to my YouTube channel and wait for more important strategies, which I'm still yet to post. See you in the next video. And make sure you turn off the notification button in order to know whenever I drop the video or be notified.